Trade examples. In this video, we're going to look at several different trading examples from start to finish, from the entry to the trade management to the exits. We're going to start with a long trade example. Example number 1, a conservative trade. The TBL indicator is green. This is going to establish an uptrend. The tetragram prints a big green bar. This validates the uptrend. Price pulls back to change one or more of the non-TBL indicators to red. Price moves up and turns all of the indicators back to green, turning the tetragram to a big green bar. This will be the conservative signal. Enter a long trade on the close of the signal candle. Stop loss is placed under the TBM. 1-to-1 take profit is placed, and the stop loss is trailed along the TBM until trade is closed. The TBL indicator is green. This establishes an uptrend. So the TBL is green at the time that we are looking to take a trade. The tetragram prints a big green bar, and this validates the uptrend. So when the TBL turns green, we get a green tetragram bar that is a big green one. Doesn't always happen at the same time. Often it does. But if it doesn't, we wait until we get our first big green tetragram bar. In this example, the TBL turns green and the tetragram bar turns big and green at the same time. Price pulls back to change one or more of the non-TBL indicators to red. In this example, it will turn the tetragram to a small green bar, and then this will be followed by a small gray bar. What happens here is the price drops below the TBS, and that changes the tetragram bars to small green bars. Price moves up and turns all the indicators back to green, turning the tetragram to a big green bar. Now, this is the conservative signal. We had the price pull down below the TBS, and then the switch and the TBM also change sides, and that gives us the gray tetragram bars. Everything starts moving back again. We get the switch and the TBS turning green, and that means we get a small green tetragram bar. And on this little candle, we get the TBM switches back to the proper side, and that gives us the big green tetragram bar. This is the conservative signal. We're going to enter long on the close of that candle, and that is where the yellow line is. That is where we enter the long position. Stop loss is placed under the TBM. TBM dot is right here. Stop loss goes just underneath it. The 1-to-1 take profit is placed. So we've entered the trade here. Stop loss goes under the TBM of that signal candle. And from there, we place our take profit the same number of pips. If it is 20 pips away, if our stop loss is 20 pips away from our entry, our take profit also will be 20 pips away. So finally, the stop loss is trailed along the TBM. These gray lines represent where the stop loss would eventually be moved until the trade is closed. Long trade example. Example number 2, the aggressive trade. The TBL indicator is green. This establishes an uptrend. The tetragram prints a big green bar. Now this validates the uptrend. Price pulls back to change 2 or more of the non-TBL indicators to red. Price moves up and turns 3 of the 4 indicators back to green, turning the tetragram to a small green bar. This is the aggressive signal. Enter a long trade on the close of that signal candle. Stop loss is placed under the TBM or TBS, whichever one is present. In this case, a 2-to-1 take profit is placed, and the stop loss is trailed along the TBM until the trade is closed. So this is slide number 1. The TBL indicator is green. This establishes an uptrend. So we have the TBL is green. We're only looking for trades in an upward direction. The tetragram prints a big green bar. Now this validates the uptrend. So we have the TBL green with the big green tetragram bar confirming that the trend is up. Price pulls back to change 2 or more of the non-TBL indicators to red. In this example, it will turn the tetragram to a small gray bar. So the 2 indicators that turn to red are the TBS and the switch. First, the TBS changes. That gives us the small green bar. And then the switch changes. That gives us the small gray bar. Price moves up and turns 3 of the 4 indicators back to green, turning the tetragram to a small green bar. This is an aggressive signal. When this candle closes, we have the switch underneath pointing up. So it went from down to up. So TBS is the only one left to change. We have 3 out of the 4 indicators. Enter long on the close of the signal candle, and the yellow line is where we would enter on the close of this white candle. Stop loss is placed under the TBM. In this case, it's the TBM that's present. Sometimes we have to do it under the TBS. But again, in this case, only the TBM is present. Our stop loss is placed under the TBM. A 2-to-1 take profit is placed. So if our stop loss is 20 pips, our take profit in this case would be 40 pips. Stop loss is trailed along the TBM until the trade is closed. These gray lines represent different placements of the stop loss as the trade progresses. Eventually, this one candle hits our 2-to-1 take profit and takes us out of the trade. Short trade examples. Example number 3, a conservative trade. The TBL indicator is red. This establishes a downtrend. The tetragram prints a big red bar, and this validates the downtrend. Price pulls back to change one or more of the non-TBL indicators to green. Price moves down and turns all the indicators back to red, turning the tetragram to a big red bar. Now, this is the conservative signal. We'll enter short trade on the close of that signal candle. Stop loss is placed above the TBM. And in this case, a 2-to-1 take profit is placed. Stop loss is trailed along the TBM until the trade is closed. The TBL indicator is red. This establishes a downtrend. As soon as this one candle closes, the TBL drops below and turns red. We get a red TBL dot. This establishes that we are now looking to confirm the downtrend. The tetragram prints a big red bar. This validates the downtrend. So on the same candle that initiates the downtrend, we get the big red tetragram bar. This will confirm that the trend is indeed down. Price pulls back to change one or more of the non-TBL indicators to green. In this example, it will turn the tetragram to a small red bar and then followed by a small gray bar. So what happens first is we get the pullback where the TBS drops down below the candle. And then the second one, the switch, which we can't see in this image, but the switch is starting to point up. And we are, at this point, having 2 indicators that have turned over, and this gives us the small gray tetragram bar. Price moves down and turns all the indicators back to red, turning the tetragram to a big red bar. Now, this is the conservative signal. When this candle closes, we get the big red tetragram bar as the switch, the TBS, the TBM, and the TBL are all on the correct side of the market. The market is bearish. Enter short trade on the close of the signal candle. This candle that changed the tetragram bar to a big red bar, when it closes, we will enter short at the close of that candle. Stop loss is placed above the TBM. In this case, the TBM is just here. Stop loss will go just above the TBM. A 2-to-1 take profit is placed. If our stop loss is 30 pips, then the take profit for a 2-to-1 scenario would make it a 60 pip profit target. Stop loss is trailed along the TBM until the trade is closed. And these gray lines represent different placements of the stop loss along the way. We would place our stop loss or move our stop loss on every single TBM dot if we can. In this case, they're every second dot, just so that they don't clutter the chart. And then we would continue to do that until our take profit is hit. Short trade example number 4, an aggressive trade. The TBL indicator is red. This establishes a downtrend. The tetragram prints a big red bar, and this validates the downtrend. Price pulls back to change 2 or more of the non-TBL indicators to green. Price moves down and turns 3 of the 4 indicators back to red, turning the tetragram to a small red bar. Now, this is the aggressive signal. Enter short trade on the close of the signal candle. Stop loss is placed above the TBM or the TBS, whichever one is present. No take profit is placed. Instead, the trade is allowed to run in an attempt to catch as much of the market move as possible. The market touching the trailing stop will be what closes the trade. Stop loss is trailed along the TBM until the trade is closed. The TBL indicator is red, and this establishes a downtrend. So as soon as we get the candle closing down, the TBL turns red, and this is the very beginnings of a downtrend. The tetragram prints a big red bar. Now this validates the downtrend. On the same candle that turns the TBL to a red dot, the tetragram turns into a big red line. That means we have the switch, the TBS, the TBM, and the TBL all pointed in the same direction. This validates or confirms the downtrend. Price pulls back to change two or more of the non-TBL indicators to green. In this example, it will turn the tetragram to a small gray bar. So at this point here, we can see we have the switch and the TBS. They are both moving up, and that turns the tetragram to a small gray bar. Price moves down and turns 3 of the 4 indicators back to red, turning the tetragram into a small red bar. Now this is an aggressive signal. We get the switch that changes. And at this point, the TBS is still underneath the price, but we have the switch, the TBM, and the TBL in agreement. Those 3 indicators give us the small red bar. This is an aggressive trade entry signal. Enter short trade on the close of the signal candle. So on that same candle, we can go short when it closes. Stop loss is placed above the TBM. In this case, it's the TBM. We don't always get to place our stop loss above the TBM. Sometimes it'll be the TBS, depending on whichever one is present. This one is the TBM. The TBM is there. We will place our stop loss just above the TBM. No take profit is placed, and instead, in this example, the trade is allowed to run in an attempt to catch as much of the market move as possible. The market touching the trailing stop loss will be what closes the trade. So we will not have a 1-to-1, we will not have a 2-to-1 or a 10-to-1 take profit anywhere. We are just going to let the trade run, and we're going to manage the stop loss along the TBM dots. Stop loss is trailed along the TBM until the trade is closed. In this particular example, the market moved quite nicely, and finally the price did pull back far enough to touch the stop loss and therefore closing the trade. Losing trades. Losses are going to happen whether we like it or not. Not every trade we take is going to be a winner. Now, this is an important realization for any trader who wants to become successful. We are actively managing our trades by moving our stop loss along the TBM. We have no desire to risk 2% on a trade and then hand it all over if the trade doesn't work. We want to reduce that risk to 1.5% or 1% or even to 0%. Some trades will be full losses, but most of the time, trade management will limit the losses we do encounter. We have everything in this example all laid out on the chart. The entry signal is right here. We get a conservative short trade as the tetragram goes from gray to a full red bar. So we would enter short on the close of this candle. Stop loss goes above the TBM, and the 1-to-1 take profit is placed. Stop loss is 50 pips. Take profit is also 50 pips. Stop loss is moved along the TBM as the trade progresses. The open of each new candle prints a new TBM dot. As soon as the new dot appears, the stop is moved to just above it. Now, this trade gets stopped out at half the risk as the stop loss was moved along the TBM dots to halfway to the entry price. So for every new candle that opens, the TBM dot keeps getting lower and lower. And at this point, we would eventually have been stopped out as the TBM dots had allowed us to reduce the risk on the trade. This trade was not a winner, but instead of losing 2%, we would have lost 1%. We entered a long position here on another conservative long signal. TBL was green. We had the pullback, gave us the gray tetragram bars, and then we got the long signal on a conservative long tetragram bar. Stop loss was placed just below the TBM. And in this example, we're going for 2-to-1. We wanted 2 times the risk. If the risk was 40 pips, we would have been going for 80 pips on this one. The initial stop was placed under the TBM of the signal candle and was moved along the TBM as each new candle opened. The market never got into profit more than a couple of pips, but even so, the stop loss was still managed along the TBM, stopping out the trade at a reduced loss. So maybe we weren't quite halfway. We went from a 2% risk to maybe a 1.25% risk. This reduces the loss that we do encounter. And in doing so, the next trade that we take is going to more than make up for the loss. Every time that we take a loss, we would like it to be smaller than the potential wins. We don't want any losses bigger than our wins. We don't want a bigger loss than a biggest win. This is going to deplete your account, and trade management, moving your stop loss along the TBM, is how we're going to save our account, how we're going to allow the account to grow. Losses are unavoidable. We will not get away from them, but we can actively participate and reduce the risk on every trade we take.